Welcome back to Imperial Wealth's Crypto Chronicle Podcast, where we're recording a history book of all the events that have happened in the cryptocurrency industry. We're going to be reporting to you on a weekly basis, so let's head live over to our team right now to discuss all things that have happened in cryptocurrency this week.
Hello, everybody. $50,000 Bitcoin is here, and we are back with another Crypto Chronicle. Taylor.
Mate, I missed the bringing in the, what are those things called again? The poppers?
Yes.
The streamers?
I think they're called poppers.
Yeah, poppers. Actually, they are, yeah.
Maybe some sparklers.
Mate, I think when we hit 100K, we're going to have to do a cake.
Yeah, for sure. Yeah, I'll get Cal onto that. He'll do it. The greatest permable known to man, except for you.
Yeah, that's true.
But it is Mitchell here today and Taylor back with another podcast, just one-on-one, chewing the fat over the recent news, technical analysis and mining that's happened over the last week, as per usual. It's been a good week, Taylor. Obviously, I cannot, for the life of me, remember the exact pricing we were at last week. I'm going to guess it was 44,000, 45,000, around
something like that.
Because I do remember in the technical analysis section, we were talking about the upside golden pocket, the potential for the head and shoulders pattern to form. That's all obviously been invalidated since we pumped right through all of that. And we pretty much said, it's on for young and old if we can kind of break this major golden pocket that we're at, which we'll dive into later. But it's been smooth sailing the last week. I feel like there hasn't been any negativity somewhat in the crypto market, which is a bit weird.
It's actually ironic because you're right. Last week we were at that sort of 43, 44K area and everything is actually very stable. Not much happened. And I actually went away with my partner for the weekend. And as soon as we got in the car is when it went 50, 45, 46, 47. And my partner is looking at me going, what is wrong? And I said, well, look, nothing's wrong. I'm like, but every time we go away, it goes up. And she goes, oh, well, that's all right. We'll have to go away more.
Yeah, well, it didn't help, obviously, as you were privy to in the day trading Discord, is I was unfortunately on a date on Friday night when we started really pumping, and I'm in the toilet trying to head short, and I think I got blown out anyway, so... Satoshi, I offered up a leverage short for you in the toilet for a short squeeze whilst...
Did you get a second date or did you wonder where you were?
We got the second date, so it was worth the stop out. But well, actually, maybe not. We'll see. But
if you're listening, he likes you.
But yes, we had obviously... Okay. Piece of equipment's just fallen over in the office. We've had a few little random moments happen, haven't we? We've got Wilbur Bear calling and...
Oh, that's right. That's right. Thanks to the...
an entire microphone stand just fell over magically.
Who was it, the one?
Chevs?
Yeah, Chevs, yeah, mate.
Chevs.
I've spoken to you, Chevs. I appreciate you listening. Good man.
Well done on making it the whole way through. I assume you didn't skip through, but...
There's another code word at the end.
Yeah, we might play this game every single one, but hey, but now that we've kind of said this, everyone's just going to skip to the end, or maybe I'll say it in the middle.
No.
Who knows? But... I kind of lost my train of thought, but we will get to the fundamental news lately. I'll just run over a couple of things. Kathy Wood, she's made a real good comparison here. We know Kathy, she's almost as big as Taylor on the bull side of things, but she believes, we'll touch on this a bit later in the technical section, but essentially what Kathy's been doing is kind of painting this picture that, Bitcoin's consistent rise is really relative to gold. Particularly when you compare kind of the infancy stages of gold, when they turned to the ETF, what happened post-ETF. But, it's anticipatory kind of what's going to happen with these ETFs because of the cycles. But I think there's a safe bet in saying, if you look at the chart of gold, after 11 years, so what was it? It was $1 trillion market cap for gold when the ETF got announced. It's now 13 trillion, 20 years later. The Bitcoin market cap is 900 billion. Let's just call it $1 trillion when ETFs got approved for that. So it's up to you whether you think, in 10, 20 years we'll be at a $13 trillion market cap, which would obviously put it at, something like $750K to $1 million price. So that's getting quite bullish, but
let me just go.
I think the points she's trying to illustrate is Bitcoin's got a strong long-term uptrend. With gold, we've got this evolving kind of don't we, where you've got the choice of hard gold or digital gold, and I think most of us are siding with the digital.
Actually, that sort of brings me on a pretty good topic from when we were speaking before, and sort of looking at the lackluster performance of gold in the last few years. Do you reckon there's been a correlation between obviously Bitcoin coming and the new generation using that as a form of gold in essence?
Yeah, definitely. I think there's probably maybe a number of things. Other thing I can point to as kind of a hedge as an asset person is probably that if you were looking to go against cash as real estate, that's just, even if you're trying to look at the boomer point of view, obviously we've just seen the real estate market do this in 2008, but gold's done that. So if you've got a couple mil and you want to park against cash, maybe real estate's your option as a boomer. Or the stock market. Think of the stock market. So why would you have your money in gold if you can just have it in the S&P 500 that just goes like this forever?
Yeah.
I think there's a number of reasons why gold has become not as sought after. I think it's just because, like you said, not just Bitcoin as an asset class, but I think majority of other asset classes kind of surpass gold, because as you and I mentioned before, you go back 5-6 years, it's at the same price.
Yeah.
Or it's 4 to 5%, whatever it might be.
It's the legitimate park.
Yeah. It's
not the park for gain, it's the park for
what's
hold.
His name? Peter Schiff. Shout out to you, my G, but you are a tosser.
Yeah.
Anyways, we all know I saw that dude tweet again this morning saying this is the most obvious pump and dump to 50k. And you know what? He said the same thing at 40. He said the same thing at 35. He said the same thing at 30. 25, 20, 15, 10, 5. If you go back, I'll post a tweet of Peter's in the Crypto Chronicle for you all to see, but it's literally a screenshot of him in like 2018 when Bitcoin was $3,000 saying, I can't believe how pathetic this asset class is, it's going to zero. And then he continues to tweet the same thing, but Peter 20x'd from $3,000.
He's literally the dude that doesn't believe in climate change.
Yeah, but he's like that, that like Simpsons meme, and it's like of the old man yelling on the newspaper. It's like old man yells at nothing. That's Peter Schiff. He's just like yelling for no reason. Alrighty, well.
We digress.
Yes, on the topic of ETFs, we've only got one thing to really say today fundamentally, and that's just an Ethereum ETF piece of news. ARC 21 shares, which is obviously Kathy, they've given it another crack. So they've thrown in kind of some staking features and some cool little things here to kind of change up what they're doing, and I think it's to adopt a cash creation model similar to kind of its approved Bitcoin ETF with additional incomes in there. So it'll be really cool to see how this plays out. Obviously, as we've been mentioning on the Crypto Podcast, is that the ETF approval for Ether, if it is approved or denied, sorry, I should say, is May, which makes a really interesting year, doesn't it? Because you get the ETF approval for Bitcoin in January, you get the halving at the start of April or mid-April.
Yep, 21 at this point.
Yeah, and then the ETF approval for Ether or ETH
potentially 9 days post halving.
Yeah.
Ooh.
So it's pretty crook, isn't it? All these events that are lining up.
How are we looking on that ETH tracker in the sense of where it was 4 months or 5 months out from approval, like BTC was, and BTC went up?
Yeah, I'd like to look at that. The thing that makes it hard is that, well, the difference between the two is you can make the argument, that Ether's going to get accumulated, but BTC just continues to get accumulated. So it's just like no one really gives a shit about ETH. But I think, I've spoken to day traders and our Trading Academy members, spoken to colleagues and other people in the industry, and I think everyone's just come to the conclusion that it's going to do sweet fuck all, and we're all going to wake up one morning and it's pumped
banged,
from 2.7K to 4K, and then we'll wake up the next morning, it's gone 4K to 10K, and we all go, oh, there's ETH. There's the ETH we know.
Forgot it was there.
Yeah, literally. So I think it's just like one of those ones.
Yeah.
Let's see what these ETFs do. A few months' time, shit is going to be crazy. So,
strap in.
I'll include an Arthur Hayes blog post, an article that talks about points over ICOs endorsing yield farming. I won't talk about that now. It's kind of a in-depth topic, but I'll include the article and the blog post and everything in there in the Crypto Chronicle. But actually, I did have something to celebrate on the ETFs. I didn't even realize, but the Bitcoin ETFs, whilst we are on the topic, have hit the $10 billion milestone just 1 month after approval. And it's worth telling everyone out there that currently, well, as it stands and as it was established, is the Bitcoin ETF was the most successful ETF in human history.
See, for things like this, you need to let me know prior. I would have bought poppers.
Yeah.
You know what I mean?
Yeah, we probably should have.
Yeah.
But that's 10 billion in assets under management within the first 20 trading sessions. So obviously BlackRock has led this with 2.7 billion themselves under management, I'm pretty sure.
Yep.
And Grayscale, they outflowed 6.3 billion across the last 30 days. So obviously net 3 to 4 billion right now, which is awesome. But
do you reckon that's why we've seen the uptick? The selling from Grayscale's finished?
I think if you, particularly what I've mentioned on the podcast in the past and what I've said to others is we have this great golden pocket 618 rejection I've showed happened in 2019, happened in 2016, happens every time, but the one in 2016 was 30%, one in 2019 was 15%, COVID was around that time, take it with a grain of salt. Let's just call it 30 to 40% is the usual pullback at this exact time of the market that's happened every other cycle. What happened was we hit 48K, the 618.
Yep.
We traded to 38.5K, which was about a negative 22% pullback.
Yeah.
And so what I've been trying to formulate in my brain is that was the pullback that we got every cycle, where majority of whales who've been accumulating, they just know how to play the cycle. They'll sell your bit for next whale, whoever runs this game, sells it there. But the positive flows and the demand from these ETFs neutralize that pullback. So let's just say without the ETFs, like think about all that
35,
40%, just same as every other cycle. So really, if you want, you can make the assumption that that happened and it was completely normal. And that happened every other cycle, but we just had negative 22 as opposed to negative 29 just because, or negative 30, negative 40, because we had such strong demand from these ETFs that were, neutralizing that a bit. And then, like you said, once the sell pressure stops, what does price do? So it neutralized it. Then the selling stopped from GBTC, from FTX, from all these things that had to sell, that were able to sell their Bitcoin at that price. Our price has just slowly kept going up and up and up, hasn't it? Since we hit 38.5K, that CME gap was filled, and then
do we see Gox sending out stuff as well?
I don't think they've sold. Honestly, that Goxen comes up every few months, and it's like, oh, we're doing it now, and then it doesn't happen. It's happening this year, but it's one of those meme FUD pieces to me that I just can't be bothered wrapping my head around and being scared of, because it's been said since the dawn of time.
Do you really reckon anyone who's got money in Gox is actually going to, as soon as they get their Bitcoin, you reckon you actually sell it? It's money that you've actually thought you're never going to get. You just wait, wouldn't you?
It's a hard one to interpret because they had it at like 3K Bitcoin or whatever it was. So some of me says, well, they've just made a 20x or 15x. They've been without this money for ages. Maybe they just sell it straight away because they're literally like, I thought I was never going to get this back. This is a free 500 grand. I'm just going to sell it, not worry about it. And then there's others that go, well, we've got the Bitcoin halving and blah, blah, blah. I want to print more on this bag. So I think both will. But
you got to risk it to get the biscuit. If you're a Mount Gox holder, hold it.
Yep, for sure.
Don't be a douche.
Quickly, just around the grounds, ETH is improvement targeted reduction L2 transaction costs for their mainnet implementation. So they've got the Denken upgrade coming. I like to say this is the Duncan upgrade from Coinstash. Shout out Duncan.
With these names?
I don't know. They think of the weirdest names, but
my God.
Eventually features proto-dank sharding, which I find hilarious as well. And it's completed its final testing on the Holsky testnet and waits scheduling for its mainnet release. So this all kind of happened on February 7. And essentially, as I said, it aims to reduce the transaction costs across Ethereum layer 2. So this is your Arbitrum, your Polygons, your Optimisms, your blah, 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 blah.
Fair Duncan, that gives value.
Denken. And Denken even introduces blobs to temporarily store and access substantial off-chain data. So it's good to see that happening.
Yeah,
and
sorry for the bad pun.
On top of that, an actual layer 2 that we love at Imperial Wealth, that I think is a very solid project, is Polygon. They've created their own open source prover, which enables Ethereum chains to function as ZK layer 2s. ZK layer 2 and roll-up technology is a huge narrative that's hitting the market last year, I believe, or kind of, the last year or two. So there's so much going on with Ethereum. This is what I mean. It's just cooking slowly in the background.
Is so low.
Yeah,
right.
Yeah, so it's 0.002 to 0.003 cents per transaction.
That's crazy.
So,
which is a huge difference.
Yeah, it's a huge difference. Yeah. But anyways, that's Ethereum for us. I think we're done on the fundamental side. There's obviously, as I said, in these times of bullish market sentiment, it's almost like I didn't notice any bad news because it probably was bad news, but bad news at this point is good news. So anyways.
Neutralize.
Yep. Touching back on technical analysis, as we've obviously said, we had that rejection from the 618. We then had locally, as I showed in last week's update, a local upside golden pocket that aligned with a predictive head and shoulders pattern that could have played out. This was obviously invalidated as we went past 45K. We then reached our prior major high. We've rejected from that for a little bit, went straight past that this morning. And now we arrived at, I think probably our highest mark would be, I'm going to go 50,400, was it?
Yeah,
50,450. Yeah. So which is actually the exact point of the 6.5 Fibonacci retracement, funnily enough. So a golden pocket, for those that don't know, you'll see it visually in the update, but a golden pocket is it's kind of the spacing or the actual area of this 0.65 and the 0.618 Fibonacci retracement. So we've claimed the 618, failing to claim the 65 now. To me, really, if we do claim this 65, I see 57K as our next target, which is the 786 retracement. Land kind of anywhere between 54 to 57K, I'd be happy.
Pretty happy too.
For all the bulls out there, it's all aboard at that stage. I think we go for Athens price discovery. 57K is claimed because it's a very high volume area, which I'll show in the Crypto Chronicle as well. But, be cautious here. Phil, if you are heavy on spot, heavy on miners, you probably should think about hedging short around these highs, because really the technical idea to you here is I can risk 1 to 2% of my portfolio in a leverage swing short position with my invalidation above the golden pocket. If we obviously break above and reclaim it, it's most likely we head to 57, 60, 70K, and you're printing on your miners and your spot. However, if you're able to pull off a short from, say, 50K, let's just say we get a little pullback to 48 to 45K, you've made a bit of profit on the downturn and can hit up Taylor for another miner. So, I think it's worth mentioning, the most important thing to me right now is looking at what 50K was in the last cycle and looking at what 50K was in this cycle. And I don't know if you saw on the day trading channels, I just gave this explanation to Tony and a few others, but, last time we were at 50K, over 50% of the supply was held by retail, or paper hands as I like to call them. Terra Luna were running a Ponzi. FTX and Sam hated BTC and were selling paper BTC to fund their alts, including Solana and more.
The irony of you bringing that up is that last time we were at 50K was when Sam was flogging FTX to the Super Bowl.
Yeah, I know. Well, you didn't let me. You didn't let me get.
Did you get there? Oh, sorry.
GBTC premium buyers were getting wrecked. We kind of had a prerequisite to the fastest rate hike in history, and Super Bowl had a ton of crypto ads, including FTX. I think we mentioned this last time. Blah, blah. And I know I was crying out for crypto ads, but I've kind of realized it was better not to have them. It shows the maturity of the market, because we don't have to advertise anymore to get to 50K, do we?
No.
So BTC, compared to all those points I just raised then, at 50K today, 70 to 80% of the supply is held by diamond hands. This means that 70% of the entire Bitcoin supply has not moved in years. So it's being held by people. So when you think about Bitcoin, and even on a more literal level, is when you're seeing Bitcoin price move up and down in the day, that isn't everyone trading Bitcoin. That's literally 10% of Bitcoin just moving between people. That's all it is price. And that's how price moves. Majority of people just hold it. So anyway, so we've got 70% of the supply not moving. Passive Wall Street bidding through an ETF that's the most successful in history. We're 9 weeks away from the halving, and rate cuts comes shortly after that. We had no Super Bowl ads, and I would like to touch on that ETF and say that the current rate of the ETF demand is 12.5 times, supposedly, the rate of produced Bitcoin in the blocks every day. So the amount they're buying is surpassing 12.5 times the amount that's getting produced. What happens when we get to the halving is the reward, the block size gets halved and the rewards get halved. So therefore half the supply is coming in every block. And so I made a funny, comment in the trading academy today, in 2 months, 2 months when the halving, 9 weeks, it's going to be 25 times now, because you've got, if that demand stays true, that is in 2 months, we'll see. But if you're trying to envision the demand and supply shock of what the halving and ETF is combined, I think that's the line you need to read. And to touch on what we were saying before, when Grayscale stopped selling and now you've just seen the price go up, does it kind of make sense why it is? Because if something's being demanded more than it's being supplied, simple microeconomics means the price goes up.
So the moral of this great story for everyone is that if you have Bitcoin, don't use it. Because it's only going to go up in value, because the more you hold on to it, the more someone wants to pay for it. Yeah.
But anyways, it's good to view 50K. I think personally, Bitcoin is 10 times healthier at $50,000 than what it was in 2020. 2021.
It's pretty crazy that we're like 18K or whatever it is, away from an all-time high.
Yeah, it is. Yeah. Well, it touches on, and I'll include a Google chart and how we spoke about how retail FOMO comes after ATHs and how it's at all-time lows right now, and that's why. It's because a lot, like, if there's no one's really speaking about it on the streets. It's not on your news channel. It's not.
I don't think they'll be there till 75K.
Well, when you see a 7 in front of the number,
yeah,
that's when you know.
Yeah. As I said,
and I think that's the scary things. And I've had people ask me, "What are your targets? What are your targets on Bitcoin?"
I hate that question.
I hate that question too. But that's the thing that I'm confused, that I'm waiting to see, is we have zero interest, and I'll show you the Google chart in the Chronicle. But when we go past 69,000, the power of the ETF institutional demand, Halving, Ether ETF getting approved, and then actual retail coming, which they haven't yet. It's an absolute ghost town. Trust me, by the data analytics. I honestly don't know what price we get to. So, yeah.
It's quite funny though, right? Because take us back 6 to 8 months ago, sorry. And, all these companies were doing, Cathy Wood's interviews, Sailor, all that sort of stuff. And what do you see the potential of Bitcoin post-halving and stuff? And them saying, 300,000 or whatever it might be. And everyone going, ha, 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 you're an idiot.
Yeah.
Well, look at where we are now.
Yeah.
We're about 2 and a bit months out from a halving. We could be at relative all-time high, at least close to it, in the halving.
Yeah.
There is absolutely no reason why we can't hit that.
I'm still not opposed, and my Trading Academy members know that for a long time speaking, I don't know if you even remember me saying this, but I was pretty steadfast on an ATH coming this cycle before, an all-time high coming before the halving, and I still do think it's possible. So
it's definitely possible.
Let's wait and see. The liquidity in the market right now, the volume, the strength is pretty nice.
Dude, we jumped up.
Yeah.
What is it?
We jumped up $2,000 this morning.
No, but what? Yeah, but even then, we jumped up 12 or 13 grand in the past week and a half.
Yeah, it's crazy. Yeah.
Can't be much more said than that, really, can it?
No. Alrighty. Well, given that Bitcoin has a 5 in front of it, our miners would be loving this.
Yes.
Give us the miner breakdown.
BTC is actually stable in that sense. Like, as much as the price action has really done us huge favors, the issue that brings being so close to the halving is it's a hash rate race, which is kind of annoying. But it only, confirms everyone's belief that mining is amazing, which, you're all welcome. So, there's not a huge amount of change on that front. They're very obviously healthy when it comes to profit, but it's still making a little bit less because of obviously the difficulty has gone up sort of around 15% over the last 2 to 3 weeks. Mm-hmm. And that's just obviously more people mining. Hash rate coming on board, probably S21s, T21s coming online. And to be honest, anyone who's got an old machine is absolutely flogging it until the halving. So you'll probably see a bit of a drop-off post-halving, which is pretty normal. Rewards, it's actually painting a very clear picture to what we were speaking before with, that there's very limited amount of transactions right now. You know what I mean? Like, I looked at the next 200 blocks about 4 weeks ago. Average amount of Bitcoin in there was about 80 Bitcoin over all those 200 blocks. Yep. At the moment, there's 20. So it's dropped quite heavily, and that's obviously just people not using Bitcoin more, which pretty much to be expected. We're about to go through halving. Everyone's holding on to it, which is fair.
Yeah.
So Bitcoin's pretty stable to where it was, which is great. Obviously, some really decent pricing still. That's a really good thing a lot of people are seeing, is that as much as we're going up to 50K, you can still get a machine for $5,000. So it still works.
Yeah.
Around the grounds, it's actually very similar as well. Everything's sort of done a very similar move, except for only one that has remained relatively stable. That's Casper, which is the ironic one because it hasn't been historically.
Right.
And so its difficulty's only gone up by about 1%, yet its price action has gone up by 40. So they're very healthy in that sense. Yeah. But everything else has remained very similar to Bitcoin in the sense the price goes up, therefore difficulty has gone up commensurate to that. So there's not a huge amount to report. Sort of the only things that are really like we're looking at the moment is obviously BTC miners. We've got our new Thailand facility that's starting up, which is doing some really cool things. Very similar to EU, same company, so no difference in that sense, just slightly cheaper power, and it's able to host the new generation T21s and S21s. Yeah. So we do have T21s on their way. So very, very limited numbers. Reach out because they're not going to last long, especially at these prices.
Yeah.
Beyond that, not much else.
Awesome. Well, I think we'll wrap it up there. Short. Actually, we almost got to 25 minutes, the usual.
That's pretty good. Yep.
Been a positive week, and we hope the momentum continues. Obviously, if there are any listeners out there that are listening in to kind of get a taste of the Trading Academy, which, mind you, we got a Ripper Casper buy on as well, which traders already up 40 to 50% on.
Yep.
Day traders, obviously, I've mentioned a lot of hedging short. If this is something that interests you, as well as the miners that Taylor spoke about, market's hot right now. You don't want to be FOMOing in at the prices we mentioned before, 60K, 70K, 75K, fucking 100K if we do see it, but you'd want to be preparing yourself now, pre-halving, for the post-halving results. So
you want to be sitting back, relaxing while retail's getting in.
Exactly, because that's your exit liquidity. You're not the exit liquidity. So thank you very much.
Can we make that into a t-shirt?
Yes, I will. Yes, I will.
I like that.
And maybe we'll get it at the Super Bowl next year instead of... Actually, that was the one ad. So the Jack from Twitter was wearing the Satoshi t-shirt.
That is true. Yeah. Close. And Biden helping us out.
Yeah. Oh, we probably should have touched on that. But anyways, long live Joe, long live Donald, and long live BTC.
Let's go.
All righty, see you guys.
Cheers, guys.